to the show. This is Trading with Livevol. My name is Stephen Choi, and this is where I trade my real Reg T account, and I use LVX doing it. So let's actually go to my account. Basically, nothing much is going on in my account, mostly because I took most of it off. So let's. The reason I did that was because I guess the stuff that was happening in Ukraine, I felt like that was causing too much uncertainty. So I have been bullish in the market. Let me actually go to it. But just in general, you know, I'm a big believer in the trend, but just reading about it kind of made me worry. So I still think it's going to go up, but I feel like if the news isn't good, we could actually have a pretty big sell-off. So I felt like that chance of the big sell-off was, in terms of like how much you can lose leaning long, was higher than what you can make if SPX does hit a new high of let's say like 1900, right? So basically, I took most of my longs off. If you look at my account, you know, if you look at it, I'm not really long that much. I'm only long $8,000 worth of dollar delta. Let me actually talk about some of the trades I saw. As you guys know, I like watching this. This is the Watchlist trade. And basically, I saw this trade in Yahoo, which was kind of interesting. So I thought I'll kind of talk about it. So you see this four-way trade. So this person did this four-way trade where they sold the June 45 calls, bought the June 40 calls, bought the October 38 calls, and sold the Oct 43 calls. So, you know, he did a four-way, but basically it's like a, you know, it's like two separate call spread in 2 different months. It's kind of like a weird condor. I don't even know what to call it, but what I did, just to illustrate it, was I put it in the position. So let me actually zero this out. So what this simulation does is if you type something in, it basically simulates what you have, and then you know, you can actually put in all the other trades. So let me see the risk chart. Okay. So I'm going to go to June, and I put this in, right? So this guy bought the June, sold the June 40 calls, 1,500 times, bought the June 45 calls, and then I went to October and put in where this person bought 1,500 of the Oct 38 and sold 1,500. So basically, you just type it in, and then what you do is you click on the risk chart, and then you'll see what the risk, what this person's trade is, right? So basically, what this person is betting on is that Yahoo. Let me actually go longer. I'll take out this one. So if you look at it, what this person is thinking, it's a bullish bet, right, for the long term. So if you look at this purple line, it's October. So by the time October rolls around, which is where he has a call spread, he basically has a call spread, right? So if you look at just this purple line, that's what he has in the end. This is what he has in the end. But if you look at, let's say, June, he overlaid this strategy by doing the other call spread. So what he's saying is normally, this, you can see like he's actually thinking the stock's going to be around here, right? Because if the stock was around here and he had its original position, you see how he's going to lose money, right? But by doing this overlay of selling calls, he's actually collecting premium on this range. So with the stock trading like 32.45, so if the stock's down, he would lose $10,000, but he would lose $118,000 if he had the Octobers, right? If the stock went up, he'll make $68,000 if the stock was 37.50, and if he had just his October call spread, he has 13,000. So what's interesting about this is he has a call spread, but he's subsidizing it by saying, hey, I don't think Yahoo is going to go too much in the next 3 months. So his trades are basically saying it's not going to move for the next 3 months, and then after that it's going to go up, and that's what he's putting on. And I thought it was interesting to because it's kind of it's not that it's not unique. This trade is unique in terms of how to take advantage, right? So for me, I think very well Yahoo could kind of maybe hang out here for a while just because of the issues with the growth name seems to be a big sell-off, but then afterwards he's saying it's going to recover in the fall, it's going to start going up again. So it's almost like the whole adage, sell in May and go away. So he's basically going to have this position on and then try to collect while the stock is in this range, right? One of the things is like, well, why doesn't he just wait until end of the summer to buy the call spread? Maybe he does think there is a small chance that that it might kind of go up a little bit, but in the end, I think he definitely thinks it's going to be within this range, because otherwise you would wait, right? So it has to be between 34.19 and like 41. So this $10 range is where he thinks it's going to be, 31 to 41. In the next month and a half or so, or the next 2 months, well, it looks like next month and a half, because that's when he'll collect. So, maybe his thinking is, yeah, he'll actually front spread Yahoo before Alibaba comes out with their IPO, and then after they come out later this summer, which could be August or something, it's like he wants to make sure that he has a long call spread. So it's interesting. It's something that I'm kind of interested in putting on, but I'll think about it a little bit more. But I think it's a pretty good spread, and the way I picked it out is because I saw this four-way, right? If you see like all these other trades are happening also, but it's not as interesting, I guess. Here you see somebody buying the Jan 40 calls, right? But in general, that was pretty interesting. So, and I kind of think of it the same way. Yahoo might actually just kind of like hang in there, but it won't totally sell off, just because I feel like that Alibaba will keep a lot of interest in people owning Yahoo. So until Alibaba goes IPO, you really can't own Alibaba, and this is one way you can kind of own like 23% of it. So you would actually, Yahoo, I almost feel like is protected from a huge sell-off just in general, because people are very eager to see the Alibaba's IPO. So I thought that was pretty interesting, so I put it in there. I was getting some requests. I don't really do any risk charts. And usually I don't do it because it's, for me, I guess I felt like it was pretty easy, but I think I'm going to start using it more just so you guys can kind of see the chart. I guess for me, I've been doing it so long, I just see the risk chart already, but I think it's important to see the trade. So there was another interesting trade here. This trade right here, where this person sold the June 29 puts 1,750 times and sold the June 31 calls 1,750 times here around 11:26. I actually went to time and sales. Oh, I think it might already be up. Yeah, time and sales, and I was trying to see if that was done with stock, right? Which you can do on this platform. And as you can see right here, 11:26, this person did that thing with stock. So he sold that strangle, and he bought he shorted 35,000 shares of Pfizer at 29.34. Now, if you guys ask me, like, Stefan, how do you know he shorted it versus buying it? Let me just kind of show you. And this one, you guys might need a little bit of knowledge on the delta calculation, so I'm just going to assume you guys know that already, right? So if you sell a call here, that gets you short delta. So you see how this is, it gets you short 22 delta for every call you sell. Here, it gets you long delta, right? So in this June 29 put, every put you sell gets you long delta. So the net is 38 delta, right? So 38 delta is roughly what you would expect, right? From that, actually 28 delta is what you would expect from that two trades, right? Which was actually lower because Pfizer was slightly higher, I think, when he did that trade. Let me actually see. Yeah, so it was actually, yeah, trading like 30-something cents higher. So the delta was actually lower. Just when I looked at it back then, it was actually not 28. It might have been, less than that. So what happens is he takes that and then he hedges. If you want to hedge it and try to be neutral, you need to sell some stock, right? So by selling 35,000, because this gets you long delta, it kind of gets you roughly flat delta. So do you see what I did? The two calculations here, right? And then what you do is you combine them, the 28 times like 1,750 gets you about 50,000 delta, but back then it was less. I think it was like 40-something, and then this guy did 35,000 shares to basically get delta neutral. So this trade happened on 11:25, and if you look at it, at 11:26:10 is when they printed up the ticket, right? So that's how I matched the stock with the option, and then I plugged it in here, right? So I plugged in being short 35,000 shares, and then short the strangle in June 1,750 times, and then I click on the risk chart, right? So this is his chart, risk chart, and I should do it here. Right, so basically what he is saying is the stock is trading around 29 bucks, so it's right around here, right? So every day that goes by, he's going to make money, and either 27.39 is roughly his break even, and maybe 31.50 or something, right? Maybe somewhere here is where his range is of being profitable, and if it stays right here, he'll make almost 200 grand, right? So that's his pick. Now, if you look at Pfizer, and if you look at it so June would be, if this is May, June would be like somewhere here. In June, he's saying that Pfizer is going to stay between like 27.50 and 31.50, right? So it's going to be within this range for the next 6 weeks. I guess he is more comfortable that it'll be around just the $28 range. So he's thinking it's going to be around here, $28 support maybe, and kind of bounce around here and maybe move up a little by June expiration, and that's his bet. And you can actually plot it and check it out. So for those of you guys who watch this and say, hey, you know, how does that block trade look? You can just plug it into LVX, then run the risk chart, and then you can see exactly what this person's trading and what their bet is, right? So I thought that was pretty interesting, so I mentioned it. As for my trading, I did a Tesla trade yesterday. So as you guys know, I did this trade for even because I liked it. And then yesterday, it was like $2 credit. Let me actually go back. Tesla. Right, so basically, right, so I sold it for $28.50 and bought this for $26.50. So roughly $2 is what, yeah, roughly $2 is what I got paid to do this spread. And what I'm trying to do is have Tesla be right around 190 by June, maybe a little less, and that'll give me pretty much, if these things expire worthless, it basically would mean that I got these puts calls for credit, right? And then I'll just sell every month afterwards and see how I do. I can even sell like a 220 call or 210 just to kind of collect premium. So I'm kind of designing my strategies a little bit, trying to learn how to trade as a Reg T account. So far, I'd say the results have been mixed. So I'm learning quickly, but I realized I can't do some of the stuff that I was doing as a market maker, and I just have to adjust and do it slightly differently. So that's one. I also have a similar trade like that in Facebook. And so I'm going to keep rolling these. And then in terms of all the other stock, I still have the BAC, Bank of America. And it's down. It was actually down today, but it looks like it's up. But basically, I have this spread on, right? It's very similar to my Apple trade, where I'm trying to make 100% return if the stock ends up on the short strike, on the short options that I have. I'll make 100% of my money by that time. So I have that on. In terms of all the other stuff, I put on some other stock. Oh yeah, I want to talk about. So I had this position, King. I sold it for 50 cents, as you guys know, yesterday, thinking like they're gonna have good earnings because all these analysts came out and kind of like, you know, were very bullish on it. Apparently that wasn't the thing is, I was correct in the fact that they did have good earnings, but that didn't save them from people just coming in and selling. So you see how like as soon as the earnings is announced, people just crush the stock, and I wasn't paying attention. I was doing some work in the morning, and I saw that it was up pre-market, so I guess I kind of relaxed, but I should have closed this out as soon as the market opened, but I didn't, and you know I ended up paying for it. But you know when I see King, and let me actually go to daily. Basically, they have earnings, and then even though the earnings was good, it gets crushed. You know, but then I see like a couple of other stocks. This is another stock that was very popular, Solar City, and same thing with Solar City. First Solar, same thing after earnings, just getting crushed. You know, I think I can just talk about almost every stock like that. You could Yelp, Twitter, right? Even Facebook, right? Even though Facebook is probably the best, and I'm still bullish on Facebook, but I almost don't even count them as the other categories. I mean, Yelp is pretty good too, but you know, in terms of like making money, I think Facebook is the closest to really making money, and everyone else is kind of trying to make money. And here you go. So you can see how all these stocks are taking a beating. The thing that's kind of funny is even after, like, you see how like LinkedIn went from 240 to 140. So it lost $100, but if you look at the last year's performance, it's still up 40%. So that's the amazing. That's how big of a run these guys had. Is that LinkedIn lost $100, and they're still up 40% if you go measure it year over year. So you know, these guys had some huge runs, and I know people sometimes think like maybe there's time to buy, but usually I think should be careful just because these can go down a lot. And I want to just give you guys, like, Amazon is a great example, because I think Amazon, I was surprised Amazon survived, but you know, you can see it after the 2000, it actually went down to like $6, right? So, and since then it climbed. So you can easily go down quite a bit more. So I think the best thing is just to be patient, and you don't want to be in front of a moving train like that when everyone is selling. So, you know, I was trying to scoop up some quick cash on this one, but it backfired. Even though I was correct, I think if I closed this out this morning, as soon as it opened, I would have been fine, because if you look at it, I'm going to look at the time and sales. See how they were trading for a nickel, 25 cents, 40 cents at the beginning. I could have just closed it out here, but I guess like I wasn't paying too much attention because I had work to do, and it kind of cost me. So it's something that I have to take into consideration, I think, because before, when you're trading, you're kind of looking at it the whole time. If that was my main trade, you know, I would definitely look at it at the open and everything else. But this time around, now that I am kind of doing this part-time, I'm not really paying as much attention. So it's something that I should try to pay attention to and see how it goes. So that's about it. You know, so in general, I'm kind of trying to stay off the radar just because I don't really know which way it's going to go, except for the fact that everyone keeps dumping these momentum stocks. So they're short. So I have one where I have this position on Tesla, right? So my Tesla position, right, is actually a hedge, or like a semi-hedge against my Facebook position, right? So in Facebook, you see how I'm long the SEPs and short the Mays. So I'm kind of putting on this spread, but if Facebook goes down, this spread is going to go worse. But in Tesla, one of the things I did like, other than the price action that it was even, is the fact that as Tesla goes down, and I was kind of grouping Tesla with Facebook because they are the same kind of grouping in terms of, like, you know, like they're up and comer, they're pretty exciting, but they're still like very growth stock oriented. I sold the 190 calls and owned the 210 calls, so it could offset each other. So if you look at my account, my Facebook loss should be offset my Tesla gains, right? It's not going to be exact. Sometimes you're going to have days when it's not going to move together, but that's what's it. If I didn't have this $329 loss in King, I would pretty much be flat, which is what I was trying to aim for. Until I see some clear signals, I should do one way or another. There is opportunities though. Just so you guys know, there were times, many times, I did make quite a bit of money, like waiting, like having this happen, and then basically the huge sell-off happens, right? So something like this, where a 10% down move, and you can kind of wait for it and see if that could be the case. It's very risky because every time you've done it, you had to basically only do it for that day, right? You see, like these, you can't rely on it to keep going down. So you would only have to do it like 1 or 2 days at most. But there is ways that you can make quite a bit of coin doing that, and you can do it by looking at the block trades. So I would look at these block trades, and there'll be trades that'll come in, and a lot of them will be just very aggressively buying puts, right? So looks like, you know, this one looks like some kind of butterfly, but who knows? But you know, and then especially at times like this, you probably want to just, if you are long stock, you probably want to just stick to the ones that have that actually make a lot of money, like real money, instead of future money, because it seems like the future money companies are not really experiencing too much love out there. But other than that, hope your trading goes well, and talk to you guys tomorrow.